Hi guys, how you guys are doing? Vincent Loo here, back at it again. And today, I'm gonna teach you guys how to do Excel backtest using Sharpe ratio heatmap. Okay, why is Sharpe ratio heatmap so important? And what is Sharpe ratio? Basically, if you Google online, Sharpe ratio, okay, Sharpe ratio defines, right, the returns of investment compared to its risk. It's a risk adjusted return of investment indicator. All right, and if you were to search, okay, Warren Buffett's Sharpe ratio, and it will actually show up, right, 0.76 to 0.97. Right, that's Warren Buffett's Sharpe ratio, and you guys already know Warren Buffett is holding 300 billion of cash right now. He's a very, very successful investor, and he got 0.97. And today we're gonna test out, can we actually beat Warren Buffett? Okay, can we actually beat Warren Buffett in getting a better Sharpe ratio? And first of all, we have to select a strategy first. And the strategy I want to showcase today will be MA crossing. Okay, MA crossing, as shown here on the charts. I have two simple moving average. I got 20 simple moving average and 50 simple moving average. And basically, if the fast moving average, right, the fast moving average, which is the 20 moving average, crosses above the 50, it indicates bull trend. Indicates a bull trend, and the price will goes upwards. So when the price goes outward, indicating a bull trend, we will buy Bitcoin, or we're gonna long Bitcoin, and we're gonna back test is on Bitcoin price, and we're gonna see how much we can actually get Sharpe ratio, and can we actually beat Warren Buffett's 0.97, right? 0.76 to 0.97. So in order to do that, we need to download some data. Okay, link in the description below, investing.com, where we can select and download some data. And we're gonna click here 2022, right? Let's select as much data as possible. January 1st of January, apply, and you're gonna press download. Okay, after we press download, we're gonna open up and we're gonna start doing some back tests. All right, so let's go over here, right? Let's zoom everything up. We're gonna remove some unwanted columns, so we're gonna left with date, price, and price change. And now I'm gonna insert another row, okay, and I'm gonna put some numbering. I'm gonna double click on this black dot right here to apply to all. And first of all, I need to filter. Okay, I'm gonna press filter right here because I want to have the oldest price at the top and the latest at the bottom. I'm gonna show you guys why later on. So I'm gonna sort largest to smallest. Okay, oldest price, okay, oldest date price at the top, and the latest at the bottom. Right now, 11, okay, November 4th of November. Right now the price is almost to 69k. Okay, 4 years ago it was at 7. So that's why we want to use, bull trend momentum crossing MA upwards, and we're going to buy because Bitcoin price always goes up. All right, so that's the strategy right here. So first of all, we need to freeze the top row, right? Let's freeze the top row. Go to view, freeze the top row, and we can see the top row. And if you were to notice, okay, moving average, right? Moving average, if I were to go to the weekly, let's go to the weekly, right? As you guys can see, okay, the moving average starts from here and the moving average starts from here. But why is it not start from, right, the very beginning? Because it needs some price, right? It needs some price to average it. Okay, so for 50 you need 50 price, for 20 you need 20 price. So we cannot put the the moving average at close to here because we need some data. So I'm gonna put MA fast for the fast one and the MA slow, okay, for the slow moving average. And I'm gonna go to 100. Okay, I'm gonna go to row 101 since the first row is given as the header. So over here, I'm gonna start putting my average formula. So I'm gonna average, okay, EVIGE, okay, average the data. So either you can select the data like this, but since we are running back tests, we want it to be dynamic. Okay, what it means by dynamic. So for example, right now I have the average of this price right here. So what if I want to have an average of you know, more prices. Do I have to keep on dragging and selecting more prices? It's inconvenient. So that's why I need to put a function called offset. Okay, I'm gonna use offset, and I'm gonna reference here and put 3 commas and how much offset I want. So that's the numbers of price that I want to average. So I put negative because I want to offset it outwards. And let's say I want to have 50, right? I want to see 50 prices. So here is equivalent to selecting 50 rows. Give 50 rows upwards. So it's offset negative. So right now, instead of putting 50 here, I'm going to reference it to a cell, right? I'm going to reference it, let's say, to a cell L right here. I'm going to put MA fast, MA slow, right? We need 2 MA length, right? I'm going to put 50, right? Okay, for fast, maybe I'm going to put 20. For slow, maybe I'll put 50. And then this number I'm going to reference to the fast one. And I must remember to lock the cell by putting $sign, right? $sign at the alphabet, $sign at the number. Okay, so I'm going to apply to all yet again by pressing double tap on this black dot right here. And then I have all my fast moving average. So if I were to change, right, let's 10, right? You see that? It keeps on changing. And we can actually plot out the graph. Okay, I'm gonna insert some line chart right here. As you can see, this is the Bitcoin price. If you go to trading view right here, I'm gonna go to daily since I'm at the daily time frame. Okay, the price is exactly the same. Over here as well, it's the same as here. So what are we doing right now is to convert, right, the data to Excel. Right? Basically, it's the same. So if I were to change to 50, look at that. The moving average changed by itself. Okay, it's very dynamic. We can change it anytime to investigate. Right? That's why we're gonna do backtest right now. So I'm gonna put this aside. In fact, I'm gonna delete it because I need 2 MA, and I'm gonna show 2 MA. So over here, this one will be exactly the same. So I'm gonna copy the formula here. Okay, and then I'm gonna select here. I'm gonna paste the formula here and press enter. And again, over here, instead of the fast MA, I'm gonna drag this box right here to the slow MA, just like that, and press enter. And then I'm gonna apply to all. Right now, I have my price fast MA, slow MA. I'm gonna press Control. I'm gonna press CEF. I'm gonna insert again the line charts to see how it looks like. So if I were to zoom it in, right, you'll be seeing exactly what you see in trading view, where the fast one will be the red one and the slow one will be the green one. So I can actually change it very fast by changing the numbers here. I'm gonna look at 10, I'm gonna look at 100. Okay, I can do that. So what is the best value for the MA cross strategy? Okay, when should I trade cross, and then I can capture all this bull trend, and I want to avoid myself from getting into the bear trend or bear market. So I'm not gonna trade when the price, so the MA, the fast MA is below the slow MA. So that's what we are doing here right now. So I'm gonna make it smaller. Okay. All right. Let's put 20 first. Later we're gonna search and see how we can find the best optimum one. So right now I can have my position. So what's my position? What's my trading condition, right? My trading condition will be if the fast is above the slow MA, then we will 1, right? 1 means we're gonna buy, and 0 means we're not gonna trade. So I'm gonna apply this to all, right? The formula is very standard. Okay, when this fast is smaller than the slow MA, and bigger than the slow MA, right? Fast is bigger than slow, we're gonna buy 1. So if you look at here, the fast MA is bigger. Okay, 6,941 is bigger than 6,900, right? Just like that. And then we can calculate our P&L, profit and loss. So how do we calculate the profit and loss? If yesterday I opened a trade, right? That's what I'm gonna reference yesterday. And today I have a price change. Okay, let's say today I have a price change of negative, and yesterday I opened a trade, I will lost. And if yesterday I opened a trade and today the price change is positive, I will gain. So it's exactly just like that. As you guys can see over here, right? Yesterday I opened a trade, one, and today I got negative price change, so I got negative P&L. So vice versa for profit, right? Right here, I open a trade, then price change is positive, I gain. So it's a very, very standard P&L, right? It's very, very standard. So with all the P&L, I can have my equity curve, cumulative P&L. So how to calculate cumulative P&L? Basically, I check my previous cumulative P&L. I add up today P&L. So I'm going to add all the P&L with the cumulative P&L from yesterday. So the formula is yesterday cumulative P&L. I'm going to add today's P&L. Then again, the following one will be exactly the same. We'll just keep on repeating. And if we can draw, right, the equity curve, right, we can just do it like this. And then we can see, right now we have our equity curve. Okay. So if you guys can see, by using 20 and 50 MA cross strategy, we can get up to 2.5x profit. Okay, 250% profit using this strategy, right? For 4 years. Okay, so this back test is from 2020, right? 2020, October 2020. Okay, so it's more or less like 4 years, right? Right now it's at now it's already November 2024. 4 years time you get 250. So can we improve it or not? Yes, we can. So we're gonna calculate, right, returns per year. Okay, let's do returns per year. And the returns per year is actually just an average of P&L. Okay, average of P&L. Since we are at daily P&L, we need to times 365 to make it analyze it. All right, so per year we can get around 48% of return using this strategy. Okay, 48%. It's actually very high. All right, your EPF, your fixed deposit, right, is only around 5% at maximum. Okay, this strategy right here got you 48. And how about Sharpe ratio? How we can get Sharpe ratio? And is our Sharpe ratio better than Warren Buffett's? Okay, are we better than Warren Buffett's 0.97? Okay, how do we calculate Sharpe ratio? So the Sharpe ratio formula, if you look at this, Sharpe ratio is actually, okay, returns is the return, okay, divided by standard deviation of the assets. Okay, the standard deviations of the risk. So how do we do that? So we get an average, all right, again, average of P&L divided by standard deviations of P&L again times square root of 365, because we want to analyze it, and we get Sharpe ratio of 1. Okay, just like that, we can have a higher Sharpe ratio than Warren Buffett. Like, how amazing is that? Okay, that's very, very amazing. And can we actually improve it? Yes, we can. And we're gonna make a heat map right now. Okay, so I'm gonna copy this formula. Okay, I'm gonna go to here right now. I'm gonna copy this formula. I'm gonna make a heat map over here, right? Just below my equity curve, right? Just below my equity curve. Let me zoom out right here. Okay. So I'm gonna place the Sharpe ratio over here. So I'm gonna put fast MA here and then slow MA here. So I'm gonna put fast MA and then slow MA for my x-axis and y-axis. Okay, I'm gonna put, right, 0. Okay, I'm gonna put 0, 10, 20. I'm gonna apply all the way until 100 for my back test. Okay, just like that. And same thing for here, 20, and I'm gonna apply all the way to 100. That will be our Sharpe ratio heat map. Now we have to do some heat map table to investigate, right, what is the best optimum fast MA and slow MA. So all we have to do is select this table, and then we go to data, and we go to what if analysis and data table. So what is my cell and what is my column? So my cell, if you guys can see, will be my fast MA. My column will be my slow MA, right? The slow MA will have all the columns. The fast MA will be all the cell. So all the way here, again, okay, slow MA will be the column, fast MA will be the cell. So fast MA, I'll select, slow MA will be the column. Just like that, I'm going to select over here. I'm going to press OK. And there we have it. We have our Sharpe ratio. Okay, if you want to put some colors, just like how I do it, go to Home, Condition Formatting, Color Cell, and this will be the colors. All right, so if you can see, 0 will have issue because we cannot have 0 MA. So I'm going to put 2. I'm going to put 2 just like that. MA cannot be lower than 2. At least you need 2 price to get an average. Okay, you can't have an average of yourself. Okay, average of yourself is yourself. Get what I mean? So we need to have at least two data to get. So over here we can see that the best optimum one will be at 2 and 40. Okay, when the fast MA is 2 and the slow MA is at 40, we can get 1.5 Sharpe ratio. Okay, by doing this, we can have a heat map. Okay, a heat map of Sharpe ratio to show the best optimum MA crossing strategy. Okay, 2 and 40. So right now I'm gonna select this to 2. I'm gonna put this to 40. Just like that. Okay, just like that. We can have our equity curve. Our equity curve right now is close to 350% using this MA cross strategy using on Bitcoin. So if you guys can see, okay, we eliminate the trades from the bear market, guys. Right, all the bear market, right, we don't trade, and when the price goes up again, we trade. Okay, bear market we don't trade, and the bull market backs up. Over here we trade again, and over here we trade again and again. So we are only taking in the bull market trades. That's how amazing it is to do this kind of Excel backtest. And we can see the optimum one is 2 and 40. Okay, can we actually zoom in the 40 over here, right? Yes, we can. Okay, so you're gonna drag just like that. You can actually zoom in and see, right? 30, 32, under 50, and then over here, after we zoom in, we see that a 42 is actually better. All right, so we go to 42. All right, let's go to 42, and 42 we can get a 70% returns average per year. Okay, so I hope you guys learned something new. And now comes the question, can we actually automate this trade? Yes, we can. And if you guys want to learn how to automate this trade, okay, just go to any one of my videos. If you haven't subscribed already, please subscribe to my channel. All right. And then if you want to learn all these things, right, you can click on any links in any of my videos over here. You can join my free algo webinar. Okay, free algo webinar where we learn how to automate the trade. Just sign up, and I'm going to teach you guys how to automate this kind of trade. Okay, how to make this automated, and you guys can let it run for years and get this kind of result. Okay, 350% for 4 years. Sharpe ratio of 1.5, higher than Warren Buffett. Return per year 70%. Okay, just join my free webinar. It's an ongoing, recurring webinar. Right, just join it, and you guys can see how to automate it. Right, I'm going to show you guys how to automate it. Right, this over here, another video where I talk about another backtest strategy. Right, link in the description again. And this strategy right here gets also similar percentage, 350. And over here, the last video, I show you guys how to automate the trade. Right, it's just like this using Python. Right, using Python to automate the trade. And if you guys want to learn how to do it, sign up to my free algo webinar, and I'm gonna teach you guys how to automate the trade. Okay, I'll see you next week. Peace.